Hi, my name is Tom Long with Daily FX, and I'd like to take some time here to talk to you about money management and our trading approach. Now, many new people come into our courses and they ask us, what's the difference between a new trader and a professional trader? And we like to tell them that we think new traders are always looking at how much money they can make and how quickly they can make it. But professional traders are always looking about how much they could lose on a trade, and they're trying to limit that risk. Now, it seems like that's a totally opposite approach, and in fact it is. But it's no coincidence that professional traders make money while many new traders do not. So we'd like to talk about money management, how to identify that risk, and how it fits into our overall approach to trading. Now, I like to think of trading as kind of a coin toss. We got a 50-50 chance of winning any particular trade. So if I say on heads I win and on tails I lose, and if I'm betting $1 when I'm right and I'm risking $1 and that I lose when I'm wrong, it doesn't take a mathematical genius to figure out that over the long term, if I'm winning half my trades and losing, I'm winning the same amount as I'm losing, I'm going to be a break-even trader at best. A lot of new traders will risk more on their potential losses than they look for in gains because they don't want to lose those small gains they get into a trade. So they put themselves in a position of perhaps winning half of their trades, but still losing money over a series of 10 or 100 or 200 trades. Okay, let's take a look at a more professional approach, and I'd like to share with you what I do. Now, when I'm looking for a trading opportunity, the first thing I do is I look for strong trending markets. For instance, this is a downtrend. You see a series of lower highs and lower lows on the market. In that environment, I'm only looking for a selling opportunity. And what I'm looking for is your typical ABC formation, with A being the top of the trending move, B being the bottom of the move, and the corrective move up to point C, which offers resistance, and then we see the reversal back down in the direction of the trend. Okay, typically this is how a breakout trader trades. If you're selling on the move down through point B, then what you want to do is you want to identify your risk above point C. Okay, so if that's 100 pips there. So we sell on a move down through point B, we place a protective stop above point C, and if that's 100 pips, a lot of successful traders will automatically use a 1 to 2 risk-reward ratio. Okay? So if they're risking 100 pips on the trade, they're looking for 200 pips in profit. So let's go back to our coin toss. If we're winning half of our trades, but now we're gaining $2 on our wins and only losing $1 on our losses, again, we can see now we're extremely profitable in that same situation. Okay? Now, but some traders, professional traders who are experienced, don't use a 1 to 2 risk-reward ratio. They'll definitely identify their risk. They will not be in the trade without a protective stop, but they like to work the trade. Otherwise, try to get as much as the market is willing to give them. And that also is part of their money management approach because they'll trail their stop down manually as the market moves down. Now, how they do that, when the market moves down to a new low and bounces up to another point C and moves down through that point, they will move their stop from point C here down to this new point C. And they will just continue to do that as long as the market moves in their direction. Okay? Now this way, it's not so much a 1 to 2 risk-reward ratio, but they're putting themselves in a position to be in on the big moves that the FX markets are known for. And more importantly, in the long run, over a series of trades, they're making much more when they're right than they're losing when they're wrong. And all they have to do is maintain a decent win ratio, which means only taking the solid setups that you identify in the market and the numbers work for you instead of working against you. Okay? Thanks for joining me. Again, my name is Tom Long at Daily FX, talking about money management, one of the keys to successful trading.